focus once again on Washington, D.C. this morning, but there's still a lot to cover in these markets and what's happening to your bottom line. Let's bring in Tyler Vernon, principal at Biltmore Capital Advisors. Tyler, good to see you as always.
Great to be here.
Last month when you were on in April, you said the market was going to take a breather. It really didn't, but Is this the breather that we're expecting from what started last week?
Yeah, it certainly ran up a lot more than I think most people anticipated. People have been really looking for less bad news, and that's what they got. But I think going forward, they're going to really be looking for signs of growth. And we just don't see there being a lot of great positive things to talk about out there, especially after this earnings season has come to fruition. So I think at this point, when we look at regular recoveries, we've seen the bulk of the recovery happen within the first 60 days. So we're past that 60-day period of time. We're already seeing a pullback. And as I said, the S&P is sitting currently at a 15, where it was back in September. And we just don't see a whole lot of great things happening that's going to push this market to the next level.
Well, money's coming out, Tyler. We talked about it yesterday, how the Investment Company Institute shows there's so much money going into mutual money market funds, cash equivalents, and coming out of equity funds. In other words, people are afraid. Is that going to be a sea change? I mean, are people just going to put their money in cash for years to come? Or is this a holding pattern? Because that's all it is, right? Stocks go up when there are more buyers than sellers.
Sure. Well, I think there's a lot of other opportunities out there that people will be looking for, whether it's on the fixed income side, commodity side. But again, investors at this point, I think, will be sitting on the sidelines. I think smart money is not going to want to get in, where it is at this point.
Why not?
Well, if we look at insiders, let's take a look at what insiders are doing.
Right?
Insiders are selling.
Insiders are selling in a big way, not just GM, but a lot of companies.
People on the front lines, the insiders, the guys that are seeing what's going on in this economy, sellers outnumbered buyers 8-1 in April. Not only that, but of course they're laying off left and right, as we know. So for an economy, if somebody thinks their stock price is going up and the economy is going to be turned around, do we think that they're going to be laying off the amount of people that they are and selling their own company stock? I don't think so. And I think we really need to, to look at what's going on. I think a lot of these growth numbers, Fed is talking tomorrow. They're going to be giving revised numbers on growth and unemployment. I think that's going to disappoint.
But the central question is, do you think earnings and the economy can get back to the peak levels that we saw before the housing bubble blew up, before the market cratered? Because if you think it's going to happen in 5 or 10 years, then why not buy stocks today?
Well, I think for somebody that has 5-10 years, get in, be dollar cost averaging as we go. For somebody that's more worried about what their accounts are going to do over the next 6 months, I would be waiting, for a pullback. I think, the consumer, to get a lasting recovery, the consumer needs to be in the game. And the consumer just isn't in the game. We saw this by, from some of the retail numbers that came out last week. Again, housing, some of the numbers that came out this morning were not all that good. So I think, what we saw really is maybe somewhat of an anomaly, some of these, green shoots. So I do think things will get better. I just think it's going to take a lot more time than people anticipate.
It's hard to read those housing starts numbers. What you're talking about, they came in worse than expected. It was the biggest drop since the numbers begun being recorded, back in the 80s. But you wonder if that's a good thing. Look at the car story, right? They're closing down these dealers, which is bad for the families, but the car companies are trying to say, we need pricing power back. The housing market needs that. You have too many homes, not enough buyers. Just like the stock market, bad for prices.
Sure. Well, it's good for finding a bottom. I think this is a good thing. It means the bottom is certainly closer. But as far as consumers go, again, they've let us out of past recessions most of the time in the past. And at this point, we're seeing people really tighten their belt. Not only tighten their belt, but I think they're going from more of a stage where they were again, spending, using these lines of credit to really balance sheet repair. We saw this in Visa's numbers a few weeks ago.
More debit cards than credit cards
across the board. Yeah. So I think there's still mass deleveraging going on the consumer side, and I think savings rate is going to the moon.
Where do your clients want to put their money? Like, what direction are they giving you? Do they want to be in muni bonds because you're in Jersey, they're afraid their taxes are going up?
Well, we're trying to show them different areas of opportunity. So, for example, right now we're seeing great opportunities in the closed-end fund space. When everything happened over the last few months, closed-end the discounts to NAV just
net asset value.
They've come in a lot, though. They have come in a lot, and if the what hits the fan, not only could you lose.
What hits the fan?
not only could you lose on the actual
mite?
investments, but that could blow out. The spread could blow out.
Correct. I think it's a short-term trade. You're right. On a lot of these bond funds, they were at 15% discounts to their net asset value. So you're buying them at 15% less than what they're worth. They've come down to about 10%, but the average has been 3%. So I think there's still some money for these discounts to come in. Not only that, but I think there's a lot going for them in the fixed income space as far as spreads still at near record highs. So I think lower grade corporates, some lower grade still has some ways to go. I think commodities still have room to run. And I do think, certain strategies related to the market makes a lot of sense if the market pulls back a little here.
Tyler, it was good to see you. You be well.
Great to be here.
Vernon, principal at Biltmore Capital, and we hold you to it. Because you've been more right than wrong.
I hope
started an alpaca farm. No, he didn't. I'm kidding.
I've actually been to Peru. You have to watch out. They will spit at you if you get too close.
Oh, I know that. And you get good tax breaks in this country if you raise alpacas, by the way.
Or llamas? Which one?
Do you have room for that in your home in Princeton? Good tax break for you, too.
Exactly. I don't have enough property. I've looked into it. You got to have a minimum number of acres of the farm tax credit. I don't quite have it. It may not stop me from just putting a bunch of sheep on my property anyway. To reduce my landscaping costs.
Care of
the White House did that during World War II. FDR, sheep mowed the lawn at the White House. Remember that.
Maybe Obama, tell Obama about it.
I'm growing hemp, but only for pants and rope. It's a joke. All right, still to come this hour, repaying TARP. A look at which banks are lining up to give the money back. Plus, the Senate voting on credit card reform. We're going to let you know what is in the bill and how it could impact you. And is the government trying to fix the housing mess or actually adding to the problem? Do you know you might soon be able to use that first-time homebuyer's tax credit as your down payment? Isn't that how we got here? Dagan says yes. We're back right after this.